Time to put the spotlight then on neobanking startup Jupiter. The company has secured an NBFC license from the Reserve Bank, and this is going to be a development that will help it dole out credit from its books. Joining in right now is Jitendra Gupta. He is the founder and CEO at Jupiter. Jitendra, thank you for being with us on Startup Central. So, a pretty significant development for the company because otherwise you've been scaling up your lending operations via partnerships and partner NBFCs. Give us a sense as to what exactly this news, getting the license, means for Jupiter.
Sure. Thanks for inviting on the show. For us, this is a significant business development. The reason for that is if you look at our business model today, we work with the Federal Bank to source deposit accounts and to monetize on those customers. Either we have to co-lend with the bank or we have to issue the co-branded credit cards with the bank. And I think with the new digital lending guidelines to co-lend, only a regulated entity can co-lend with the bank. So from that standpoint, the license was kind of necessary to start the relationship with the bank on the co-lending side. So it gives us a huge leg up in our monetization journey going forward. And plus, the lending is also done is a risk management business, and the risk management business is better done when you're regulated. In my view, ideally only the regulated entities should be in the risk management business, and because RBI really cares about who is lending, the terms of lending, and how the risk management business is being managed at a portfolio level. So all in all. We are pretty excited with this development.
Oh, yes, indeed. So let's get in more perspective. How much are you, as of now, looking to invest into the NBFC? Who is going to run this, and how is it going to really be housed? Because I understand it's going to be under a completely separate entity.
Yeah, this is a separate entity in the Jupiter Group itself. We are capitalizing the company with the equity of almost 100 crores plus. At the same time, we are also in discussion with banks to raise debt money. In fact, recently, like last quarter, we also lined up the venture debt from a couple of venture debt guys for the same lending operations. So we're looking this year, this financial year, the disbursements to the tune of 600 to 700 crores.
Okay, fair enough. Now, you've got a number of marquee investors, the likes of Matrix, Sequoia, Tiger Global, etc., that are on board. Just give us a sense as to what the total fundraise is and who some of your key investors are.
Sure. So we have raised money over 3 rounds so far. We started the company in 2019. So it's been over 3 years now. We have raised so far $162 odd million from a total fundraise standpoint. Out of that, the last round we raised was $86 million. The key investors, like what you mentioned, Sequoia, Matrix, Tiger Global, but the other key investors are QED investors and Neobank. Now, QED, just to mention, is the fund which is founded by ex-Capital One founder in US, Nigel Morris. So they come with huge experience of managing credit businesses or bank-led businesses or the credit card businesses. So we gain a lot from their experience. And Neobank is one of the largest digital bank in the world, based out of Brazil. So we definitely get a lot of guidance from them on our scale up and how to manage on the operation side.
Okay. And you're on the cusp of becoming a unicorn, a soonicorn. So take us through your valuations at present. And are you looking at any further fundraising rounds?
So we are not raising money at the moment. We are pretty comfortable with our fundraise. In fact, we have not used any dollar of our last fundraise yet. So from that standpoint, very, very comfortable. I think this whole unicorn, in my view, is a vanity metric. Our real goal is to scale revenues. Our real goal is to create a sustainable business, and I think that is what we are focusing in coming years. So we are really not focused on how do we become into the unicorn club or some other club which startups want to chase for. We are outside of that.
All right, and walk us through now how this move of securing this NBFC license is going to help bolster your revenue stream. What do you currently enjoy by way of revenues, and how is it looking to increase further? What kind of margins as well in lending will you likely see now? What is, some of the internal targets you have in mind?
Sure. So as I said, that our business model is to create a relationship with the customer on the deposit account, which we work with Federal Bank, and then monetize through lending and credit cards, co-branded credit cards with the bank. Now, on the lending side, we already started lending 5 months back with one of the partner NBFC. We have already disbursed more than 100 crores worth of loans so far. This month, we disbursed close just short of 25 crores for the month. And I think we were kind of holding on our scale up, one, because we were learning what kind of risk metrics play out from a portfolio standpoint. And second, we are waiting for the license to come in to start the longer duration loan. So far we are restricting only loans up to 6 months. So from a revenue standpoint, generally the revenues are revenue profile increases automatically when you do a longer duration loan and a higher ticket loan. So which is what will be starting from the next quarter. So all in all, I see our revenue scale up happening significantly this year, and our net margins, like overall margin in the lending business, the net interest margin which we are clocking are close to 500 basis point. We expect that to increase by 200 basis point or so. So all in all, our net interest margin, we should clock around 700 basis point going forward.
Okay, what's the current loan book that you have at present, and what's the outlook on growing that?
So as I said, our loan book, so disbursement we are done close to 100 crores. The loan book is close to 60 odd crores out of that, because we are mainly doing the short duration loans. But this year our focus is to grow our loan book close to 500 crores.
All right. Just walk us through the outlook then down the line as to how you're looking at your existing customer base really expanding and the kind of scale that you'll be really operating and driving the business at.
Sure. So if you look at our business, so we have three verticals. One is the deposit account in partnership with Federal Bank. Second is the lending vertical, and third is the investments, which is the mutual fund distribution vertical. On the lending vertical, as I said, we have been there in the business for last 5 months. On the investment vertical, also we launched mutual fund distribution almost 6 months back. Now we have more than 100,000 investing users. This month, the users, investing users are doing more than 300K SIPs. So we are seeing a very organically growth there. Going forward, we expect, so today we have 2.3 million customers. Going forward, we expect this base to grow to 4.5 million customers in next 12 to 18 months. So yeah, all in all, our focus is that how do we entrench deeper relationship with customer by offering multi products in terms of their financial services needs. So we'll continue to expand on that and going deeper with our product bouquet in these customer set which we're acquiring.
All right. Walk us through, the outlook when it comes to the kind of ticket sizes that you currently enjoy. What is the average loan tenure currently, and what is the outlook?
Sure. So we today mainly do loans up to 6 months tenure only, because one, we just started, so we wanted to see the performance data in a shorter duration, the feedback loop from our risk metrics in the shorter duration. So the average ticket size, we're doing only 30K, and six up to 6 months tenure. Going forward, we'll be expanding the tenure to 18 to 24 months. And the ticket size I expect to increase to 75K to 100,000 rupees on an average. So that's what we should be launching next quarter onwards.
Okay, and finally, walk us through your outlook in terms of the vision for the company after having secured that the NBFC license. This certainly puts you on a different orbit, how you're planning to deal with competitive intensity, and where you see the company headed over the next few years.
Sure. So if you look at the financial services market in India is like very, very big. So frankly, while the competition is there, but I still see a lot of opportunity considering consumers are moving to digital world faster than before. People are expecting personalization in financial services as well, not just your commerce or food ordering. So lot more consumers are adopting newer offerings like us. And I think that is naturally giving us a growth at a lower cost of acquisition of the customer. So our aspiration ultimately is where RBI forms some guidelines around digital bank, and we become eligible to apply for that license. That is our aspiration ultimately. But that is yet to be seen when and how that happens. But till then, we'll continue to operate as an NBFC and a financial services platform, and continue scaling that. I expect in next 4 to 5 years, in the target group, which we cater mainly the millennial target group below 32 years of consumers, us to becoming the leading financial services platform in that segment.
Best with those goals, and thank you so much for taking time out and joining in on the show, Jitendra.
Thank you.